Hello, champions. I hope you're doing really well and I hope your preparation is going smooth. So, in this video, I have 8 key concepts from FEMA to discuss with you. I'm going to give you a quick revision on these 8 points. These are those 8 points, guys, which have some numbers involved or they have some limit in them, because of which, before the examination, if I'm able to give you a quick refresher, it'll be very, very effective. All right. So, come on, let's begin. And by the way, once I'm done with all of these 8 points, I also have brought a set of concept test questions for you so that through this video itself the points get revised for you 2 times. Okay, so come on, let's do this as nicely as we can. Sit up straight and listen to me. Each of the 8 points really important, guys, extremely crucial from the examination point of view. Okay, my very first point over here relating to current account transactions. See, you know, right, under FEMA we have current account transactions and capital account transactions. Current account transactions, 3 schedules we have: schedule 1, schedule 2 and schedule 3. Schedule 1 talks about prohibited current account transactions. Schedule 2 talks about those current account transactions which are permitted but you require CG approval, and schedule 3 talks about those current account transactions which are permitted but you require RBI approval. My first discussion with you is regarding schedule 1, basically the prohibited current account transactions. This is a schedule, guys, where you have remittance out of lottery winnings, remittance to purchase lottery tickets, football pools, sweepstakes and all, banned and prescribed magazines. So all of these are your prohibited current account transactions, right? So in that schedule 1 only, you have one very important point relating to rupee state credit route. Very simple point, guys, listen to me. See, generally what happens is, if you want to make any payment of commission on exports under this rupee state credit route, and for this if you want to make an outward remittance of foreign exchange, generally it's a prohibited current account transaction, guys. So generally payment of commission on exports under rupee state credit route under schedule 1, it is a prohibited current account transaction. But however, there is an exception. In that exception there are two conditions. If both the conditions are fulfilled, then that prohibition will not apply. Understanding? So generally, my general rule is that if you're making payment of commission on exports under rupee state credit route, it is a prohibited current account transaction. But if two conditions are fulfilled, condition number 1, the commission is not exceeding 10% of invoice value. Commission is within 10%, and the goods which we are exporting, they are either tea or they are tobacco. If both of these conditions are fulfilled, then the prohibition will not apply. Okay, this is my first important point. Then comes the second point. The second and third point both are relating to schedule 2, guys. Schedule 2 talks about those current account transactions which are permitted but you require central government approval. This is the schedule, guys, where you must have learned about cultural tours, transponders and all of that. So here two really important points. Listen to me as nicely as you can. The first point is relating to remittance of prize money or sponsorship relating to sports activity abroad. So here it fully depends upon who is making the remittance. The person making the remittance, if it is an international, national or a state level sports body, then in that case no approval will be required. They are allowed to freely make the remittance, guys. But if the remittance is being made by any other person, then we will see how much is the remittance. If it happens to be up to $100,000, guys, the limits are in dollars. If it happens to be up to $100,000, here again same thing I'll say, that is no approval is required. But if it happens to be more than $100,000, then yes, CG approval will be required. And in central government, whose approval will be required? You will require the approval of Ministry of Human Resources and Development, Department of Youth Affairs and Sports. Okay, so this is your second point, guys. So my first limit was regarding payment of commission on exports under rupee state credit route. Generally it is a prohibited current account transaction, but however, if the commission is within 10% and if the goods are tea or tobacco, then the prohibition will not apply. Then my second point is about remittance of prize money or sponsorship relating to sports activities abroad. See, don't remember just prize money. Okay, remember both of these words, prize money or sponsorship relating to sports activity abroad. If the remittance is being made by international or national or state level sports body, you will not even check anything. You will straight away say approval is not required. But if the remittance is being made by any other person, then you will check, is it up to $100,000 or more than $100,000? Only if it is more than $100,000, only then CG approval will be required. Okay, now listen to me. What if there's a person, he's making a remittance of this foreign exchange for prize money relating to a dance competition outside India? Will CG approval be required? No, be careful. CG approval is only for sports activity abroad, not for dance competition abroad. Then tell me, what if this person who is making the remittance of prize money, he is making the remittance of prize money for sports activity abroad, exactly $100,000. Is CG approval required? No, only if it is more than $100,000, then only CG approval is required. Okay, then what if this international, national, state level sports body, what if they are making a remittance more than $100,000? Doesn't matter. For them, CG approval is not required. Understood? So there are three places where ICAI can twist the question in this regard. Place number 1, if the prize money is relating to dance competition or anything else, then CG approval is not required. This point is covering only sports activity. Point number one. Point number two, if it is exactly $100,000, CG approval is not required. Only if it is more than $100,000, then only CG approval is required. And the third place where they can twist is if the person making the remittance is an international or national or state level sports body, then also CG approval is not required. Okay, guys, this is your second point. Now come to the third discussion. The third discussion is regarding advertisement, guys. See, if the advertisement is being made by state government or its PSU, here only full drama. I will check conditions and all. On that basis, I will give my answer. But if the advertisement is being given by any other person, no need to check anything, guys. I can straight away say that no approval is required. So the whole focus is going to be only on state government and its PSU. So if the advertisement is being given by state government or its PSU, and if three conditions are fulfilled, if all these three conditions are fulfilled, only then central government approval will be required. And in central government, I will require the approval of Ministry of Finance, Department of Economic Affairs. Now, what are the three conditions? Condition number one, the advertisement should be in foreign print media, like for example in a foreign newspaper or a foreign magazine. It should not be a foreign radio channel or it should not be a foreign TV channel and all. It should be a foreign print media, which means foreign newspaper or foreign magazine. For example, let's say New York Times. Okay, so condition number one, the advertisement should be in foreign print media. Condition number two, the remittance has to be more than $10,000. So for your prize money, sponsorship, sports activity, here the limit was $100,000. For advertisement, here the limit is $10,000. More than $10,000 limit, only then CG approval is required. And condition number three, the advertisement is for what? What is the purpose of advertisement? The advertisement should not be fit. What is fit? I'll tell you. So if all these three conditions are fulfilled, only then CG approval is required. So be careful. If the remittance is relating to advertisement, if the remittance is being made by central government or if the remittance is being made by state government or its PSU, only then you will check about the conditions and all. But if the advertisement is being made by any other person, no need of any approval. So when is approval required? Only if the remittance is by state government or its PSU. But even in that case, we will check three conditions. Condition number one, the advertisement should be in a foreign print media. Condition number two, remittance should be more than $10,000. And condition number three, the purpose has to be not fit, other than fit. If all these three conditions are fulfilled, then CG approval is required. Okay, now come on, let's try to understand what is this fit. F over here stands for foreign investment. Then I stands for international bidding. And T stands for tourism. Okay, so if the purpose of the advertisement is any of these three, then CG approval is not required. CG approval is required only if the purpose is not fit. The purpose should not be fit, only then CG approval is required. Now, even over here, let me tell you what are the ways in which ICAI can twist the question. Either they can say that the person who is making the advertisement is central government or central government's PSU. Then CG approval is not required. Or they can say that the amount is exactly $10,000. Then also CG approval is not required. Or they can say that the advertisement is in foreign news, foreign TV channel. If it is in a foreign TV channel, then also CG approval is not required because only foreign print media is covered. Fourth way in which they can twist this is, they can also say that, the purpose of the advertisement is, let's say, tourism. Then also CG approval is not required. Alright guys, now come on, let's move on to the next schedule, Schedule 3. This is where the next 4 points will be covered. So I have 4 points for you. All the 4 points are from Schedule 3. See, Schedule 3 talks about those current account transactions which are permitted, but you require RBI approval. Now, in this Schedule 3, there are 2 parts, guys. Part 1 talks about individuals and Part 2 talks about non-individuals, companies and other entities and all. So, I'm talking about Part 2 only. I'm talking about non-individuals. Okay, for these non-individuals, no. In Schedule 3, there are 4 transactions. 4 transactions only, guys. Those 4 transactions, if the remittance is more than a certain limit, then RBI approval is required. So what do we have to understand now? What revision am I going to give you now? First of all, I will tell you what are these 4 transactions. Then for each of these 4 transactions, what is the limit? So if the remittance is within the limit, then RBI approval is not required. If the remittance is more than the limit, then only RBI approval will be required. So come on guys, let's have a look at the 4 transactions one by one now. The first transaction is donation. So if you're making remittance for this donation more than the limit, then only RBI approval is required. So what is the limit now? Two things you will calculate. Number one, 1% of foreign exchange earnings during 3 preceding financial years. Thing number two, $5 million. Out of these two, whichever is a lesser number, that will be the limit. So if the donation remittance is more than this limit, then only RBI approval is required. Let's take a numerical example. Let's say right now it is 24-25. So 3 preceding financial years means 23-24, 22-23 and 21-22 guys. So 23-24, let's say my foreign exchange earnings were $50 million. In 22-23, let's say it was $150 million. 21-22, my foreign exchange earnings was, let's say, $100 million. So the total foreign exchange earnings of 3 preceding financial years over here is going to be $300 million guys. So this into 1% will be $3 million. So this $3 million or $5 million, whichever is lesser, will be your limit. So $3 million is lesser, this is going to become your limit. So if I'm going to remit donation more than $3 million, only then RBI approval will be required. Understood? So the limit over here is 1% of foreign exchange earnings of the 3 preceding financial years or $5 million, whichever is lesser. So if the remittance is more than this limit, only then RBI approval is required. Alright. Then comes the second transaction, which is for commission. Commission relating to what? This commission is relating to residential flats or commercial plots in India. This commission is paid to whom? It is paid to agents abroad. So this commission is relating to what? It is relating to residential flats or commercial plots in India. It is being paid to whom? To agents abroad. Now again the same thing guys, if the remittance for this commission is more than the limit, only then RBI approval is required. What is the limit now? The limit will be 5% of the inward remittance or $25,000, whichever is higher. For donation, it was whichever is lesser. Only for donation, it is whichever is lesser, okay? For the remaining 3, it is whichever is higher, alright? So the point over here was relating to commission. Commission relating to sale of residential flats or commercial plots in India. The commission is paid to whom? To agents abroad. And please remember, the limit is per transaction. So if the same agent is selling multiple houses for me, per transaction, per house, you will apply this limit, okay? So the remittance for commission to agents abroad for sale of residential flats or commercial plots in India, per transaction, if it is more than the limit, only then RBI approval will be required. What is the limit over here? The limit is 5% of the inward remittance or $25,000, whichever is higher. What is this inward remittance? You've sold the flat for how much? The agent got you a sale price of how much? That inward remittance, 5% of the inward remittance or $25,000, whichever is higher. That's going to be your limit. Okay, then comes your next transaction, consultancy services. Extremely important guys. If you're acquiring or if you're procuring consultancy services from outside India, like let's say you're hiring a Japanese consultant relating to infrastructure, so you have to pay him consultancy charges guys. So if the consultancy charges are more than the limit, then RBI approval will be required. What is the limit? It depends. If the consultancy is relating to infrastructure project, the limit is $10 million per project. But if the consultancy is relating to anything else, then the limit is $1 million per project. So if the remittance is more than this limit, only then RBI approval will be required. And lastly, reimbursing pre-incorporation expenses by an Indian company. Not going too much in detail about the meaning of this concept guys, because that itself is one other 15-20 minutes discussion. Not worth it right now. Right now, just remember, reimbursing pre-incorporation expenses by Indian company, if it is more than the limit, RBI approval is required. The limit is going to be 5% of the investment brought into India, nothing but 5% of inward remittance. Same 5% of inward remittance we had for the agent's point also. So 5% of the inward remittance or $100,000, whichever is higher. Everywhere else you have whichever is higher. Only for donation only you have whichever is lesser. Okay, so for donation, it is 1% of foreign exchange earnings in the 3 preceding financial years or $5 million, whichever is lesser. For commission relating to residential flat or commercial plot in India, paid to whom? Agents abroad per transaction. If it is more than the limit, then only RBI approval is required. What is the limit? 5% of inward remittance or $25,000, whichever is higher. Then for consultancy services, if it is infrastructure related, then $10 million, others $1 million. And if it is reimbursement of pre-incorporation expenses by an Indian company, here the limit is 5% of the inward remittance or $100,000, whichever is higher. Remember, for the agent's point also, that agent commission point also, and here here for this pre-incorporation expenses point also. In both, the common point is 5% of the inward remittance. But for the agent commission point, there's one more number which is $25,000, and for the pre-incorporation expenses point, it is $100,000. Alright, so out of these two, whichever is higher will be the limit. If the remittance is within the limit, no need of any RBI approval. If it is more than the limit, only then RBI approval is required. Okay guys, and then comes the last point, LRS. LRS here the limit is $250,000. See, I'll explain LRS to you in very simple words, okay? You'll understand. What happens is, when it comes to these foreign exchange transactions, some transactions you require RBI approval, some transactions you require central government approval, guys. Now, LRS, central government has no role to play over here, because this LRS, this liberalized remittance scheme, is a scheme made by RBI. And this is a scheme which RBI has brought in to make its life easier. So, wherever RBI approval is required, current account transactions schedule 3, RBI approval is required. Capital account transactions schedule 1, the permissible capital account transactions. So, wherever RBI approval is required, first of all, we are talking only about those transactions. Now, those transactions, if total put together, your remittance during the year, if it is within $250,000, then in that case, RBI approval is not required. Understanding? Very simple, guys. Wherever RBI approval is required, for whether current account, whether capital account, for all those transactions, wherever RBI approval is required, those transactions put together, if the outward remittance, if the foreign remittance is within $250,000, then RBI approval is not required. But however, there's a catch over here. Even if it is more than $250,000, okay, but if it is relating to emigration and that foreign country where you're migrating to, that country's authorities have given you an estimate which is more than $250,000, or let's say the remittance is relating to studies abroad, and that university where you're going to go and study outside India, that university has given you an estimate which is more than $250,000, or if the remittance is relating to some medical treatment abroad and the hospital where you're going to get the treatment, they have given you an estimate which is more than $250,000. In such cases, even though it is more than $250,000, but because it is on the basis of an estimate, here also RBI approval will not be required. Understanding? So 2 points. Point number 1, wherever RBI approval is required, those transactions put together, if the total remittance happens to be within $250,000 during the year, it's an annual limit, okay? This limit will get reset every year. So if it is within $250,000, RBI approval is not required. But however, even if it is more than the limit, but if it is for emigration, studies abroad, or medical treatment abroad, and that respective authority has given an estimate according to which you require more than $250,000, even in that case, even though it is exceeding the limit, still RBI approval is not required because it is on the basis of an estimate. Okay. Now here one more very important point you should remember, guys, and that is, even if it is within $250,000, let's say it is within the limit, okay, but you are making remittance to a non-cooperative country, or if you're making payment to a territory which is notified by FATF, which is Financial Action Task Force. So even if it is within the limit, okay, but you're making remittance to a non-cooperative country or to a territory which is notified by FATF, then in that case, LRS will not apply. RBI approval will be required. Even if it is within the limit, still RBI approval will be required if you are making remittance to non-cooperative country or to a territory notified by FATF. Okay guys, so this is about LRS. LRS and limit is $250,000. So now let me summarize all the limits for you now. It's a revision of the revision. So here, number 1, the first limit was commission relating to exports. Rupee state credit route, generally it's a prohibited transaction. But however, if the commission is within 10% of the invoice value, and if it is relating to tea or tobacco, then it is not a prohibited current account transaction. Then remittance of prize money relating to sports activity abroad. Here the limit was $100,000. If it is more than $100,000, only then CG approval is required. Then advertisement in foreign print media by state government or state government's PSU. Here the limit was $10,000. If it is more than $10,000, only then we require central government approval. Then donation point. Donation by non-individuals. The limit over here was 1% of the foreign exchange earnings of the last 3 preceding financial years. This number, or $5 million, whichever is lesser Donation alone is whichever is lesser. Then commission plus agents abroad, here the limit was 5% of the inward remittance or $25,000. $25,000, whichever is higher. Then for consultancy services, we had two limits over here. For infrastructure projects, the limit was $10 million, and for other projects, it was $1 million. Then pre-incorporation expenses reimbursement, here the limit was 5% of the inward remittance or $100,000, whichever is higher. So except $100,000, whichever is higher. So except donation, there we have whichever is lesser. Other two places it is whichever is higher. Then LRS, here the limit is $250,000. But don't forget, even if it happens to be more than $250,000, still if it is relating to emigration, studies abroad or medical treatment abroad, if it is supported by an estimate, then RBI approval is not required. LRS will still cover it. Okay. Now come on, let's enter into our concept tests. I have 3 concept tests for you guys. Let's see if you're able to answer. The first point, BCCI is remitting $120,000 to the US for organizing a cricket tournament. Do they require CG approval? It is more than $100,000. It is relating to a sports activity outside India. Is CG approval required? The answer is no, because I had told you for this prize money point, the first thing you will check is a remittance by an international, national or a state level sports body. Yes, it is by BCCI. So I don't even have to check anything. Straight away I will conclude no approval is required. Okay. Now the whole concept test number 2 over here is entirely relating to the foreign print media point, guys. Listen to me very carefully. I have 8 situations for you. You have to tell me whether in each of these 8 situations whether CG approval is required or not. Okay. Advertisement in foreign print media by state government more than $15,000. Is CG approval required over here? Yes, guys, because it is by state government or state government's PSU in a foreign print media more than $10,000. So yes, CG approval is required. And let's assume the purpose is not fit. Then, advertisement in foreign newspaper by state government's PSU $15,000. Even over here, if you see, the advertisement is by state government or state government's PSU. It is in a foreign print media. It is more than $10,000. And let's assume the purpose is not fit, not FIT. So even over here, approval will be required. Then, advertisement in foreign print media by central government. Here, CG approval will not be required because CG approval is only for state government or state government's PSU. Similarly, central government's PSU, even over here, also CG approval will not be required because you remember the whole drama was only if the remittance is by state government or state government's PSU. Okay. Then come to situation 5. Advertisement in foreign print media by Reliance Industries Limited. Is CG approval required? No. CG approval is required only if the person making the remittance is state government or state government's PSU. Here it is Reliance Industries Limited, not required. Then comes your sixth situation. Advertisement in foreign print media by state government for promoting tourism, guys. Come on, check your 3 conditions. It is state government or state government's PSU. Yes, condition number 1, it is in foreign print media. Condition number 2, yes, it is more than $10,000. Condition number 3, purpose. The purpose is fit over here, guys. The purpose is T for tourism. So if the purpose happens to be fit, then CG approval is not required. CG approval will be required only if the purpose is not fit. Here it is fit, therefore CG approval will not be required. Okay. Then, advertisement in foreign magazine by state government's PSU for promoting a product, $15,000. Let's check. Yes, it is by state government or state government's PSU. Yes, condition number 1, it is in foreign print media. Condition number 2, yes, it is more than $10,000. Condition number 3, the purpose is promoting a product. Is the purpose foreign investment? No. Is the purpose international bidding? No. Is the purpose tourism? No. So the purpose is not fit. If the purpose is not fit, only then CG approval is required. If the purpose is one of these 3, then CG approval is not required. Right, guys? Lastly, advertisement in a foreign TV channel by state government. Foreign TV channel, guys, it is not foreign print media. So only if it is foreign print media, only then CG approval is required. Okay, got good clarity on this point. So the conditions are, first of all the conditions will apply for whom? State government's PSU. Condition number 1, advertisement should be in foreign print media. Condition number 2, more than $10,000. Condition number 3, purpose should not be FIT. It should not be fit. Okay, then come to the last part, guys. One final revision of the entire 4 points that I taught you under Schedule 3. Tell me, for non individuals, donation, what is the limit? For donation, the limit is 1% of the foreign exchange earnings of 3 preceding financial years, or $5 million, whichever is lesser. Donation alone, whichever is lesser. Then commission relating to residential flats or commercial plots in India to agents abroad per transaction, the limit is 5% of the inward remittance, or $25,000, whichever is higher. Consultancy services, two limits you have, guys. For infrastructure projects, the limit is $10 million, and for other projects, the limit is $1 million. In pre-incorporation expenses, here your limit is 5% of the inward remittance, or $100,000, whichever is higher. Notice everywhere the limits are in dollars. Okay, that's it, guys. These were all the points that I wanted to discuss with you from FEMA as a last minute revision point. I'm hoping you found this super helpful. I am calling this as the SOS series, that is study on spot, wherein these kind of concepts you can finish the learning with me with the video itself. If there is any other concept or chapter on which you want me to make these SOS videos, please let me know. Before this FEMA, I've already made the SOS video on LLP. I hope you've watched that. That is extremely important, guys. I've covered two very important concepts over there: compounding of offenses and whistleblowing. So this video was on FEMA. If there's any other concept or chapter on which you want me to make these SOS study on spot videos, please ensure you let me know. Bye bye.